Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
Welcome to the Mailbox Money Show. My name is Bronson Hill. Really excited for this episode. I have Bob Bernotas here, who is talking about franchises. Now, before you turn off and say, I'm not a franchise guy, or I don't want to own a McDonald's or a Subway or whatever, this guy is doing some really unique stuff within, scaling up kind of emerging franchises. He said the money is made is not really in buying an established, like a McDonald's or a Subway. It's buying some of these ones that they're up and coming, or there's a way as a passive investor where you can potentially provide funding or scale up or provide a group that actually helps to finance and scale up an owner that maybe owns, 2, 3, 4, 5 locations, and you're going to help them to go further. Because if you're an owner, it's very difficult to do that. But this interview is really fun. I think you're really going to enjoy it. Love to hear some feedback on this. I'm personally very interested in this. So let's jump in. All right. Really excited to have you, Bob. How are you today?
Great, Bronson. How are you?
I'm well. Yeah, we kind of discovered, I think, in the pre-call here and before we started recording, that we were in the same area last week. I didn't know you're in Pennsylvania, kind of in the Lancaster area. I was out there for some meetings and stuff. Beautiful area out there.
Love the area. Grew up in this area, moved around the country, but found my way back to my roots. Love this area.
That's awesome. It's beautiful. I hear the fall is really beautiful too. I would love to get out there in the fall sometime. So
it is. I could do without the winter, but up to the fall, it's perfect.
So, Bob, you have something that's really interesting to me, that your experience, your biography is just super fascinating. For our listeners, I have really found this private equity roll-up strategy, the franchise strategy, even sometimes just financing to help franchisees, or if somebody actually, starts a franchise business, it's potentially a way that you can grow passive wealth, or you grow wealth and you're passionate about it. Maybe you do spend your time in the business, but eventually there is the ability to scale. But I'm excited to have you talk. You've done a lot of things. You own a lot of franchises. Can you talk a little bit about your experience? I know you just had an acquisition of a 6-unit franchise recently, and just talk a little bit about kind of how you got started with franchises, some of your background.
Sure. Broke into franchising back in 1986 in the video industry, which a lot of your listeners may not even know what that is at this point.
These tapes like DVDs, you put them into something like streaming without the streaming.
Right. Yeah, forget the DVDs. It was back in the VHS days, where you're paying 60, 70, $80 for a single copy of a new release, and you're renting it for $2. So you needed a lot of rentals, but it was still a lucrative business and had its time. But what technology did to that industry. But I've owned several franchise concepts that I've built and sold over the years, been consulting for a couple of decades as well. I was CEO of a national chain, and we sold that concept to a larger group. But my whole career, my whole life has been pretty much in franchising.
That's great. So I think so. A franchise, just so those that aren't as familiar, obviously we've all been to a McDonald's or a Chick-fil-A or a car wash, and we understand, okay, these things are franchised, but what does it mean? Like, why would somebody buy a franchise? Because typically you buy a location or a territory or one unit or whatever it is. Why would you do that rather than start your own restaurant, start your own business? Like, what's the benefit to having a franchise?
Well, I mean, your success rate is going to be infinitely higher with a franchise because you are buying a proven model. And the right franchise companies have put a lot of tools in place to support their franchisees. So there's an old adage about franchising, corny, but it's accurate. You're in business for yourself, but not by yourself, right? So there's so many, there's plenty of franchises you don't want to go anywhere near, but there's some really, really good concepts out there as well. And the better franchises, they take on a mentality of your success is our success, meaning the more successful their franchisees are, the more successful the franchise company happens to be. So when it comes to like models and franchising, most franchise companies, at least the better ones, they make money almost entirely or strictly on their royalty fee. They're not making money on up front because what it takes to launch a franchise, a new franchisee, a lot of resources are spent in the early stages. There's a lot of pass-through things, like things they may charge you for, but usually, you're gaining economies of scales with those things simply because if you had to go out and buy them yourself, it's going to cost you considerably more. So those things tend to be passed through. So if they have a 6, 7, 8% royalty fee, that's where they make their money. And hopefully they're giving you enough value and charging you that it's a better way to go. I mean, I'll give you one example. I mean, I've placed a lot of people into, I wouldn't name the concept, but it's a gutter concept. They install gutters on homes, and it sounds, but the average franchisee is doing 1.7 and reliably dropping about 25% to the bottom line on an investment that is in $250,000 range. There's a couple of people that are part of that organization that became franchisees that were previously gutter contractors. One functioning in the San Antonio area, he was doing $300,000-400,000 a year. On his own, he became a franchisee of this concept, and 3 years later, he's in the $3 million range in revenue. So that's what the perfect example of what a good franchise model can do for you.
Yeah, I know it's really amazing. I think you really, you hit on a lot of things there, but the idea of, you're not just starting a business, you have something that's kind of in the box. Here's the model, here's the plans, here's the menus, here's the structure, here's how you do all these different things. There's a lot of support, there's a lot of training that goes into that. But it's interesting, I look at businesses like a restaurant in general is not a great business because it's very labor intensive. We know people that, we're trying to develop Mailbox Money, right? This is the Mailbox Money show. How do we develop passive income? It's not very passive, but if you can create multiple locations and you can learn that process, and then you can basically have other people launch and take and run with it, maybe provide different things, then you've got a scalable system. That's how McDonald's has become, so successful in these groups, because you go to McDonald's, or Starbucks is not a franchise, but you go to locations of Starbucks, it feels very similar. Same with McDonald's or some of these other things. So it is really, really great. I want you to talk about two aspects of franchises. And again, this, for our listeners, this is not to sell anyone on, hey, you should buy or start a franchise, but there's a passive way to be involved with franchises. There's some that are more passive, or even ways that we get involved in franchises, where we have our car wash deal with Tommy's Express Car Wash, where we basically it's 150 locations, and we're in a part of scaling up, kind of doing a private equity roll-up strategy where you're trying to sell for a higher multiple. There's passive ways to be involved, and there's active ways. So can you talk, maybe, I guess, for people that are more passive, what are things they might find interesting, or are there some maybe franchises, just if they could have direct ownership, that are more passive?
Yeah, and look, there's really two different levels of that. There's semi-passive concepts, and then there's passive concepts. Even passive concepts, there's some time involvement, but it may only be a few hours a week, like you mentioned, a self-serve type of car wash. There's also, laundromats, there's salon suite concepts. Often those are more real estate plays anyway. In my opinion, the most bang for the buck is with semi-passive franchises. You are going to trade some of your time, but have a much greater return on investment. Like you mentioned at the beginning, I mean, I just bought, with my small investment team that I put together, we bought the developmental rights to 6 units. I mean, the unit economics, this is a semi-passive concept. That means typically an owner can operate it by putting in 10 to 20 hours a week in the early stages. Eventually, that should become less and less. Once you have competent people in place, your systems are running nice and smoothly. But the unit economics on it are just off the charts. And the reason being is and that's why I should say, that's why you're seeing this brand sell out virtually overnight across the country. The dirty little secret about franchising is that it's all about the top concepts that you can get into are emerging brands, because if you're hearing about a brand, you recognize the brand, typically means it's sold out in your market. So if you can get in a franchise at the right time and there's enough territory for scalability, then you may have something. And to your point also, franchises are constantly getting bought up right now. You probably know the trend that's happening by PE coming in and buying into or buying these franchises outright. But it's not just the franchises, but they're also buying up some of the larger franchisees, and in some cases, some of the smaller franchisees, let's say 3 units and up. So the investment that I just made, what we are positioning for, given the fact that this is one of the fastest selling brands in the country, it'll be done nationwide in a year, and it's pretty new. But we're positioning to be hopefully part of some roll up should that day come. But regardless, to be able to sell something like that at a really strong, 3, 4, 5, 6, 7, 8 multiple of earnings is, and given the startup cost, each unit $325,000. It's not a lot of money. Yet when you look at, and I can't get into this, but when you look at the top line and bottom line, I mean, it's dropping a good third to the bottom line. And you're talking well north of $1 million, the average unit's doing.
And I shared this with you before we start as well. I have a friend who's in his 80s, and he has made a ton of money. He's net worth north of three to 500 million or so. And he basically said there's a couple strategies he's done to really grow a lot of wealth, and this is one of them, where he would come to a group that operates franchises. So someone who's got 3, 4, 5, 6 locations, whatever, and they're looking to scale. And basically, there's funding, maybe there's SBA, there's some funding in the beginning, whatever, but it's hard to kind of really get things scaled up beyond that. So he would come and say, hey, let's be partners and I'll help provide equity for you. And you have a proven model, you have a good operator, and then they would grow. And eventually maybe he'd buy that person out and have a CEO come in and take that over. But they've done this with kind of a doggy daycare or dog training type of thing, gotten to a couple hundred locations. And it's just been phenomenal, right? So if you have a great business, can you talk a little bit about, there's a lot of, and I love what you said. I think this is a real good takeaway is it's not just, brands, everything's, I should own a Subway or I should own a McDonald's. Or well, you're not going to make as much there because it's not emerging. It's not something that's like a great concept. You want to catch it kind of on the way up. I know Cody Sanchez is kind of a nationally known person who buys boring businesses. She says, I buy boring businesses. Right. And so I know there's also a lot of boomers that maybe have franchises or have things you're looking for retirement or things like that. Is this also a way to maybe come to people that have some of these, or you're buying maybe from a previous owner that doesn't really operate as well, and maybe you can come in and add some value and say, hey, we're going to increase things. Maybe somebody's kind of tired of owning it, or they have other things going on, and it could be something that you could focus on. I guess, what are some of the great strategies when you're coming in looking at like the person who's selling this and their motivations for selling, about how you could come in and really have a win there?
Yeah. So from the perspective of your listeners, can they come in and buy some of these franchises if they're underperforming or a few locations? Is that your question?
Yeah, I guess the question really is, the opportunity as an investor. It could be buying from, one could be scaling. One could be like the example of my friend of scaling. The other could be just, hey, I'm coming in as somebody who's interested in franchises, and who could be a potential like target to take over. So I guess there's two questions there. There's two different questions. One is about scaling up with an existing person. One would be more about you actively coming in. So maybe we could take those separately if you want.
Gotcha. Yeah. And so let's touch on the latter first. I always discuss up front with any client that I take on about the possibility of scaling. And there's so many different ways you can do that. Like I'm scaling with a brick and mortar concept. It's not retail, it goes into office space, medical parks. So the cost is a little bit less as opposed to brick and mortar retail build out, which is considerably higher. But there's also scaling with concepts. And to your point about boring businesses, I mean, I love the category. Anything home service related, that's been the strongest category in franchising for the last 6 years. Only getting stronger. Baby boomers with a do-it-yourself generation, they aged out of it. Young people aren't going into the trades anymore, so it's leaving a void, yet there's tremendous demand. It's a very fragmented mom and pop industry. What I like about that category, and I've placed so many of my clients in it, is that scaling does not involve opening multiple brick and mortar locations. In other words, you can come into it and you can have one centralized location, and that might be an office, it might be some flex space, maybe a small warehouse with some office space in it, but you buy multiple territories. In other words, you buy multiple franchise. So let's say it's a concept, and the first franchise to get up and running, stood up, everything you need to have it operating, and then let's say the second franchise might be $40,000. The third franchise may be $30,000. The fourth franchise may be $27,500. So now you tripled or quadrupled your geographic footprint, in effect, tripling or quadrupling what your financial upside can be. So I'm always of the opinion, scale horizontally first and own as much territory as possible. With these types of concepts, you're not going to spend a lot of money like you would with a brick and mortar retail concept. And then you scale into them maybe by adding vehicles, and many of these concepts now have developed semi-passive models. The trend in franchising is semi-passive. More and more of these concepts have developed platforms, meaning more support tools to allow you to start the business putting in 10, 15, 20 hours a week. But then you can scale back from that pretty quickly.
Yeah,
Once you've scaled, I'm sorry, go ahead.
Oh no, that's I think I like the idea of semi-passive where yeah, it's basically you get it set up, you're doing enough, and then maybe eventually you can have a team member or somebody help you with that, right? Maybe there's some help you can bring in to help on the owner side.
Yeah, I mean, anything you start eventually can become semi-passive and eventually can become passive unless it's a consulting type of concept like what I'm doing right now. If I stop doing it, I stop making money.
Yeah.
But the franchise that I own, I'm not going to put much time into it at all. And the person who will be operating on a semi-passive basis, eventually they're going to be able to back off more and more. But that's the whole, in my opinion, the whole point of franchising is to leverage other people, and eventually you're not spending time. Now, if you have to spend 10, 20 hours a week for the first year to really get it up and running, but your return on investment is going to be infinitely better than some things that might be more passive. You mentioned the concept earlier. It's a great concept. There's car washes, there's salon suite concepts. These are passive concepts, laundromats, but typically you're $1 million plus, $2 million plus for those types of concepts. I'm a big believer. You don't need to spend a lot, especially if you get into those service type businesses that have every bit the upside, but you might spend, $400,000 on multiple territories that you scale into over time. It also puts you in a good position to scale vertically at some point, meaning you own one concept, let's say it's a service related concept, pick something, a home house painting, whatever it happens to be. Insulation is really strong right now. But then let's say a year, 2 years later, you add a second brand, you introduce it to the same customer base that already knows and trusts your first brand. You're gaining economies of scale. Your cost of customer acquisition is going down. You stand up that brand more quickly and you start to scale vertically as well as horizontally.
Yeah, that's great. I think that's great. It's interesting. Yeah, you said you don't need that much money to get it going or that big of an investment to get started. What are some? I mean, you mentioned a few different concepts. If someone wants to be a little more passive, it doesn't want to put a ton of money in. What are some interesting things that are out there now? Maybe not specifically, but just what sort of industries or what sort of concepts are you seeing? Yeah.
Yeah, I mean, salon suite concept. If I were to get into something, car washes are always great. Salon suites I like, and that's simply you're taking space, maybe 4, 5, 7,000 square feet. It's nice retail space. It's all built out. Now your investment might be north of $1 million to do that. You're not going to see, a huge return on your investment, but is it reasonable to see $250,000 a year? Maybe even 100% cash on cash return on your money on those types of concepts, but you might be spending a few hours a month, no employees, because you become a landlord. It's rental. Yeah. You're basically doing this beautiful build out and providing a home for people in the beauty industry, and they pay you on a weekly basis, maybe $350, $450, $500 a week for that space. But that's still a lot better than working for someone else and just getting a much smaller payday. And most of them cannot afford to go out on their own and do the build out necessary to have a nice salon. Right.
Yeah, no, that's great. So that's and I guess, one thing to look at too here is looking at your market, right? Seeing, I guess there's every one of these has a degree of market research, or you're looking at, like I live in the Los Angeles area, you live in Pennsylvania. So it'd be interesting to see, in certain areas, what is there a need for, right? When you're looking at a specific market, like, oh, hey, we're seeing that whenever I see this type of business, or I'm seeing demand or growth in this area, is that something you also look at as kind of trends as they're happening? Or if there's a ton of, salon suites already, maybe that's not the best for that area. Maybe there's something else, or a car wash or something that could work there. Is that those considerations
sure.
that go into that as well?
Yeah, it's going to depend on demographics in the area. Look, even things that don't appear to be semi-absentee or passive concepts can become passive. There's one brand family that I work with, and I can't name them, but they own a slew of brands. They've created a platform, and they've put a ton of money into this platform and a lot of experience behind the founders of this company. They created a platform that really takes the support up to another level. It's a manager model. They are in the service space, and that could be B2C or B2B, home service or B2B, working with contractors or whatnot. but they created a platform with a national call center. They're handling all of the admin really for the franchisees. They do the hiring for the franchisees. Basically, you can step into the model, and that is a manager model. They even help you hire the general manager that's going to run the concept. Theoretically, yeah, you can put a handful of hours in per week, maybe 10 hours a month, and you can operate a concept like that. Once it's stood up and you feel comfortable with your GM to handle it by themselves, you can back off even more.
Yeah. So I know you mentioned on the prior example of the salon suite, $1 million. If somebody doesn't have $1 million up front or in cash, is there some financing available for something like that typically? So is it SBA loans? Is there something the franchise will help you as well? I mean, how much down in a situation like that? Like, what's the right way? I need like 20% down or 50% down, or what would be?
I mean, it really depends upon the concept and how comfortable they are with the buyer. I mean, and it could be on a low end, anywhere from 10% down up to maybe 25% down. I mean, there was a rule of thumb, I would say 20% is reasonable. I work with some of the largest funding entities that strictly work with franchise companies. Lots of different instruments that we could potentially talk about. SBA is one instrument, 401k rollover is another instrument, for portfolio loans. There's lots of different ways that we could potentially go. That's part of the service that I provide. I work with clients to help them procure the financing.
Yeah, that's great. No, I think that's really interesting to figure out, if there's ways that you can finance it that make it easier. So I guess, if somebody's interested in this space, obviously you're someone like yourself, you're someone that you educate people on this, you get a fee for kind of placing people into different franchises. Are there any other resources that are out there? I imagine it's a pretty quick changing space. So it's like a book would be kind of outdated. There's websites, things trying to sell people stuff, but is there any sort of educational pieces or videos or things that you'd recommend people do to kind of learn more about, hey, I'm interested in investing in a franchise type model?
Yeah, there's lots of books, and you're right, they do become dated pretty quickly, especially with the advent of these semi-passive types of concepts. But if you go to my website, there's a lot of resources on my website. I do recommend some books. I have an ebook myself that you can download for free. But it ideally find a mentor, somebody that understands the franchise space, somebody that has spent a lot of time in the franchise space, preferably somebody that has been on both sides of franchising as a franchisee and then on the franchisor side, because you get two distinctly different viewpoints from that. But franchising in general, there's a ton of information out there. Unfortunately, most of it's not on the internet. So when you do franchise searches, you're landing on portals and they're trying to sell you something. And I will tell you, most of the better franchise companies, they don't advertise that way.
Who's the ideal person to buy a franchise? Is somebody I'm thinking if somebody's retired, or maybe still feel like they got some more juice in the tank, they're in their 50s or 60s, or maybe they have had a business or left a job and they're, maybe they're younger than that, but they really feel a motivation or a passion in that particular space. Or what are some of the ideal people that do this?
That's a really interesting question, because I've seen that change over the years. I mean, previously, most of my clients, I'd say average in their mid 50s, and they were just tired. I mean, executives made really good money, just tired. They, making good money, but putting in 50, 60, sometimes 70 hours a week, and they know they can't maintain that pace forever. So that was my typical client. And I work with a lot of franchise investors that own franchises, and they're looking for the next greatest, something they can really scale. But more recently, I've had a lot of clients who were in their 30s, even some who were in their 20s, that they've been able to put a little cash together, who were really interested. But typically it's someone coming from corporate America. It's an executive. They have a pretty decent net worth. They're making good money. And most of my clients are looking for semi-passive or passive, but most are semi-passive. They're willing to trade some of their time for a really good return. And they want an off-ramp. They want to get out of corporate America eventually, and they want to replace their income or some passive.
We have a few more minutes here, Bob, but I wanted to ask you, You mentioned you had your concept you're doing. I think before you mentioned you had some investors that were joining you on that journey as well. Is that set up like a syndication or something like a private, like kind of like a private placement deal for
No,
the investors?
it's a private placement deal.
Right.
These are all people that I knew. It started out, one was a client that I was working with and simply didn't have enough to open a single unit with this particular concept. So I like the concept, and sometimes when I come across a concept that I like, I'll throw that out there. Hey, look, I may be, if I feel comfortable with the operator, if I feel comfortable with the market he's in, and I like the concept, I may throw that out there. I did in this case, and he said, yeah, I'd love to have you come in with me. And then all of a sudden, one turned into three, which then turned into six. So I brought in a couple of other people as well.
Yeah, I think that's a really cool concept. I syndicate. We have our real estate and our other alternative funds that we've done, and it seems like a great idea for those that maybe if they haven't done it, but they are interested in doing it, to be able to buy those additional locations for the ability to expand, or maybe somebody has one location and they can get more, and they can say, hey, here's a way we can kind of eventually build up to this. But I think the idea of a lot of times what really limits at least a model like this, I imagine, is just having the capital up front, or even the capital to scale. And that's where, like I mentioned, my friend who's super successful has just found a way to help scale some of those. So there's another way to kind of,
Sure.
hey, someone's got multiple locations. Could I, as a passive investor, come in and help them scale? Absolutely. There's a way you can create a model that makes a lot of sense. So
absolutely. Look, and the variables are: is it a good market for the concept? Is it a strong up and coming concept? Is there good territory still available with that concept? And do you trust the operator? If those things all line up, I think there's really good opportunity. And do you have the market, enough market to scale into?
Yeah. What's one lesson you wish you had known earlier about franchises?
Oh, that's a fantastic question. I wish that I never got involved in the food space. I don't usually tell this story.
Oh, please tell it.
Look, I broke my own cardinal rule, and I've said, as long as I broke into from when I first broke into franchising, I will never get into food. I was approached by someone who I knew and was a very successful operator. He owned a whole slew of sports bars in Des Moines, Iowa, and surrounding areas. But he started this concept. It was a Mongolian grill concept, and he opened a unit. I first stiff-armed him, wanted nothing to do with it, but he opened a unit. He was on a run rate after 6 months to do $3 million in his first year. He caught my attention. I franchised the concept. I helped him sell the first handful of franchises, which were on the East Coast, and I invested heavily into it myself. Didn't work out so well. They did not translate to the East Coast, and food can be so darn fickle. And then eventually, even that unit that was kicking butt, it eventually closed down. So,
wow.
Yeah, I stay far away from food. The margins are low. I mean, too many opportunities to screw up in food, and labor is really, really difficult these days.
It kind of brings up too I found the more labor intensive businesses, such as a restaurant or like a dry cleaner or something where someone's got to be there all the time. I have a friend that their parents ran a dry cleaner, and it was like they were just there all the time. It was like they'd go to school, to the dry cleaner after school to go see their parents, because like that's where their parents always were. Right. And it's just not a very scalable thing. So I really like that idea. Well, Bob, I just wanted to say I really appreciate you. You bring a lot of savvy to this space, and it's obvious that you're doing stuff not only for yourself, and we love bringing people on that are knowledgeable of different assets, but also have experience with those assets. You have a ton of experience, investing in the asset as well as placing people there. So that's really wonderful. How can people get in touch with you if they want to connect?
They can go to my website. It's franchisewithbob.com. Real simple. They're just schedule a time with me. You can schedule a 30-minute call. I'll be happy to spend a little time with you, assess your situation. You can also download my ebook, or just reach out to me through the website, and I'll be happy to talk.
Awesome, Bob. Well, Franchise with Bob, I'm really excited to have you here. Excited for this episode to go live. And thanks again for being with us today.
Thank you very much. Really enjoyed it.
I really enjoyed this interview. I loved what he shared, just some of his secrets about, franchises. Cody Sanchez, if you follow Cody, talks about, buying boring businesses, right? It doesn't have to be that sexy of a business, but if it just makes sense and people can get behind the concept and it makes money, right? A lot of great businesses are not exciting, like a gutter business. Well, doesn't sound very exciting, but if you're making big time money, it doesn't really matter how exciting it is. There's a need there, right? So sometimes the non-sexy businesses are the ones that actually can generate a lot of cash. So we do that in our car wash deals, ATM funds, different types of things. We got some new deals we're working on right now. We're continually working on new stuff outside of real estate. And it's amazing with franchises, they also can be financed. So a lot of times only, for the franchise fees or even some of the startup fees, sometimes you can finance, he said usually around 80% of the total cost, which is really amazing, right? So then there's a lot of ways to be able to put financing in there. So I hope you enjoyed this episode. Again, this is really great to learn about. This has multiple different assets within there. You've got restaurants, you've got car washes, you've got other, personal development or health stuff in there. You got many franchises. There's so many different types, but the model is the same. And that's what's really amazing. So I really enjoyed this. Encourage you to take a look at it and reach out to Bob if you're interested. And we'll look forward to seeing you on the next episode of the Mailbox Money Show.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.